Hello, my name's Holly Mackay. I'm Managing Director of the Platforum. I wanted to share a sneak preview of our 2014 Guide to European Platforms and Open Architecture with you. We're going to take about 20 minutes to have a look at some of the key findings and areas of this report. So what does our research entail? Well, we looked at 9 different countries across Europe and spoke to and interviewed over 58 different platforms. We actually got data this year from 41 platforms too. We spoke to more than 20 asset manager firms across Europe and also talked to regulators and trade bodies to make sure we had that fuller view. Finally, we supplemented the research with an industry poll conducted with more than 100 senior execs across European countries. Of course, in conducting this research, we visited multiple countries, and I confess to consuming a little bit of Italian wine and doubtless some French wine along the way. The scope of this, platforms, it's very difficult to define them across European markets, but for us, we don't focus on the infrastructures, the trading infrastructures. We look at those platforms which manage the custody, the transaction and execution piece. And for today, although as we'll discuss, this is changing, most of the platforms we cover do also get involved in the rebate negotiation. Importantly, these are platforms servicing primarily distributors. They're not TAs or custodians looking after the asset manager relationships. So let's dive in and see who is in scope in this report. Firstly, we identify a group of platforms we think of as international players. So let me give you an example here. 10 years ago, if you looked at one of the leading platforms, Allfunds Bank, it was very much a Spanish creature. This grew up within the Santander Bank. It was part of Banif, the private bank there. Allfunds then moved to the Italian market as São Paulo acquired a 50% stake in the business. But today, if you look at Allfunds, it works in Dubai, it works in the UK, Chile, Colombia, just to name a few of the other markets. So this is truly an international creature. This is one of the key takeouts for us as we've looked at European platforms over the last 3 years. This international group are growing at the same time as in the funds universe. The cross-border funds are also accelerating and showing tremendous new growth. You can see there a stat with thanks to Diana Mackay from Mackay Williams, 76% of new money in European funds is in the cross-border world. So tremendous growth in the international platforms. All the data in our report is as at Q3 2013, international platforms had grown by 39% year on year. Moving to the more domestic UK market, these are platforms which primarily service what we used to call IFAs, but since regulatory changes, we now call more broadly financial planners. This is a concentrated market. The top 3 players, Cofunds, Fidelity and Scandia, have a 53% market share here. There are about, no one can quite agree on the number, there are about 25,000 financial advisors in the UK today. And as at Q4 last year, 75% of new business they wrote went on platforms. So these are a key relationship for any fund manager looking to the UK retail market and thinking, how can I distribute my products here? We then head east and go over to Switzerland, and this market is an interesting one. It's private bank dominated, and you can see the largest 3 brands there, UBS, Credit Suisse, Swisscanto, all quite different creatures. UBS the most international of those platforms, but between them they control a whopping 245 billion euros. You can see their fund channel, Allfunds. There are new groups coming to this market, and I think it's a platform market which is ripe for change and shake-up. But today, foreign fund managers looking to this market have to focus on the 3 Swiss giants. Moving down to Italy, and this is a difficult market to look at from a pure platform point of view. Arguably, Allfunds is the only platform in this market. The other names you can see on the screen there are paying agents, but we include them because these paying agents are key relationships for third-party fund managers. In Italy, every distributor will appoint a paying agent. Now, many of the banks sold their transactional business. So Unicredito, for example, sold its transactional business to Societe Generale. So you're a fund manager, you want to deal with the distributor powerhouses at, say, Fineco or Unicredito private bank, you have to go and talk to Societe Generale. So we've included these groups, but platform purists may argue the definition, and they have a valid point. Looking at the German market, this is interesting. It's a really hybrid market in distribution terms. About 30% of flows go to the IFA community and 70% of fund flows go through the banks. The IFA market in Germany is in turmoil. The qualifications have become much more onerous of late, and IFAs are leaving the industry in droves. I think the platform business we see there servicing them has been quite inefficient in the past. One of the platforms you can see here told me they have 60,000 IFAs registered, but 90% of their business comes from just 2,500 IFAs. So we expect to see great concentration and change there. Most of the platforms in Germany will work with IFAs, but you have groups there such as Atrax, which work, for example, with the credit banks. Moving over the border into France, and this is a market, again, where big banks dominate. If you are a third-party fund manager wanting to sell into the French market, you talk to the banks. Now, they have different divisions. They'll have private bank arms, for example. They'll have multi-manager businesses. Now, the formal word is if you want to sell to these groups, it's all sort of centralized. There's a centralized buying channel. But we hear on the ground it's not like that in practice. You have to talk to the multi-manager division. You have to talk to the private bank. They will largely manage their third-party fund buying internally today. The platforms that we do see changing and growing are those life company platforms, which are looking after the independent financial advisors, as well as the more institutional platform models there, Fund Channel and Axeltis. So when we look at the open architecture assets across Europe as a whole, we see the UK is the biggest platform market there, followed by Switzerland, Italy, and Germany. The international pool there looks a lot smaller than it is. If you take all of the assets of the international platforms, you include all of the assets of Allfunds, all of the assets of UBS, all of the assets of Fund Channel, then the international platforms in total have 390 billion euros. To avoid double counting, a curse when you're looking at any platform market, the international figure you see there is almost a balancing item. So that picks up the business of those international platforms not already counted in the individual domestic markets. This market positioning chart goes some way to helping people understand that platforms across Europe are really different looking creatures. Take the Italian market, for example. I mentioned earlier a lot of the platform players we look at are in fact paying agents. It's a very institutional business. It's a low margin business. These platforms are working with large bank-owned, typically, distributors or those groups who are wrapping third-party funds into their products. At the other end of the spectrum, you have the UK market, which is really acutely focused on independent financial advisors. Now, our market in the UK is consolidating, is concentrating, but still it's been a very retail platform market. The platforms here deal with individual financial advisors, not with large institutions. So as you can see, for groups sitting outside Europe, wanting to understand this market, it is impossible to have this sort of pan-European strategy, in my opinion, at the moment. You do have to approach each and every market as a slightly different creature. So in summary, when you look across Europe at the open architecture platforms, you can see it's a huge market and it's growing substantially year on year. The last year we saw 24% growth. To sum up the individual markets, the UK, it's all about individual financial planners. They're using platforms. The CIPS there, that stands for Centralised Investment Propositions. It used to be a few years ago that individual financial advisors would choose what funds they wanted, would put together their own portfolios. To have success in the UK market, you had to be prepared to drive up and down the M1 talking to 25,000 different individual advisors. Not so today. The world is concentrating, it's consolidating, and financial advisors are increasingly outsourcing effectively the building of these portfolios to model portfolio providers, to discretionary fund managers. So all change there. Switzerland, well, it's a story of private banks, and I've mentioned the big three. In Italy, it's a bank-dominated market. You either talk to the promotori, groups such as Fineco, Fideoram, or you talk to the GPFs, the people running fund of funds or model portfolios. In Germany, well, it's a hybrid market, as I said earlier. You've got to talk to the banks. You can't ignore the banks. Hugely powerful in Germany, but you also talk and engage to IFAs. I mentioned the IFA market in Germany is in turmoil. More of those advisors are either joining pools, which we might call networks in other markets, or they're upskilling and becoming discretionary asset managers in their own right. But great change there. In Spain, it's all about the banks and it's all about all funds. If you're a third-party fund manager and you want to distribute your products in Spain, you either need all funds on side or one of the large private banks. And finally, France, it's a unit-linked market. For those wanting to sell third-party funds, it's talking either to the banks and the multi-manager stroke private bank divisions, or engaging with those life insurer platforms used by IFAs. So that concludes our tour of the individual European planets and some of the life forms that inhabit them. I now wanted to give you a sense of some of the key themes we saw at more of a pan-European level as we conducted the research. The first thing on everyone's lips is the RDR. Do you think RDR will be replicated across Europe? Well, we put this to an industry poll of some 150 people across various European markets. And the consensus view coming back from people was yes, in most markets, so notably not in every market, but it will take longer than 3 years. So with the clear exceptions of the UK and the Netherlands, people not convinced that we'll either see the sort of full extent of the ban or that it will happen any time soon. Really, the words on sort of most people's lips is all about better and improved transparency and greater disclosure. That's very much the feeling coming from the French markets. Talk to people in Italy, for example. There's no sense that things are going to move soon. The banks have been vulnerable and it's not felt that there's any appetite to risk the status quo there. A question I have that occurred to me as we were talking to various platforms is I wonder if, as was the case a few years pre-RDR in the UK with the platforms, I wonder if markets are moving ahead of regulation. What I mean by that is we talked to one major international platform, for example, one of the biggest ones across Europe, which told us that over the last 12 months, a third of their share classes have moved to clean share classes. That is in response not to demands from the regulator, but in response to demands from their distributors. So there's a slight sense, I think, out there that regardless of what MiFID says or does, there may be a move towards clean share classes and a different revenue model sooner rather than later. So the jury's really out. Moving to look at revenues, I've mentioned there that the general trend towards clean share class adoption. Asset managers all want to know, well, what does this mean for my relationship with platforms and who pays who? Clearly in the UK and in the Netherlands now, fund managers do not pay the platforms. The platform is paid for by the distributor stroke, the end client. That is slightly being tested as we speak. Platforms are still allowed to charge asset managers for a few specific events, for example, corporate actions, or if there are pricing errors made. And as we bring this research to you, we hear that slightly being tested in the UK, and we think what we may end up with across Europe is a hybrid model where platforms are paid in part by the asset manager via a service fee, a listing fee, or perhaps in the UK a much more detailed breakdown menu of chargeable items, and also by the distributors. You can see a sort of representative quote there from the boss at one of the international platforms we deal with, saying actually, you know, platforms give value to both distributors and asset managers, so both are likely to pay. That was the consensus view across Europe. Another huge thing we note is ongoing concentration and consolidation. If you look at the funds which are selling, the third-party funds on open architecture platform, I think that 80-20 rule is being tested. I question if we're getting to the 90-10 rule. Certainly when you talk to the platforms, they're saying, well, the mid-sized subsidiary asset manager is disappearing, and it's the big blockbuster brands which are selling more and more. But there's also platforms noting the ongoing requirement for niche, local product. Germany, you know, Flossbach Storch, apologies for my dreadful pronunciation, mentioned there. And in France, Moneta is another group mentioned. So very much the era, I think, of the blockbuster fund, but with a few local exceptions. So welcome to the 90-10 rule, question mark. Lipper have told us that the 10 best-selling funds account for 23% of fund sales across Europe. Our survey indicated that people believe that will increase and will account for more like 30% of sales. And talking to platforms across the board, it's not untypical for up to 30% of assets to sit with just 5 fund managers. We talk to platforms in both Switzerland and Italy where 10 fund managers hold 80 to 90% of assets. It's a market which we see year on year becoming much more concentrated. What we've done in our research is ask the platforms we've dealt with to tell us who their top 5 fund managers are, and we'll report that back to you and do in the report in aggregate. We do that for the UK market, the French market, the German market, and across all international platforms. You can see here this chart looks across all the international platforms across Europe and ask them to identify who their largest third-party fund managers were. We also factored in the size of the platform. So you can see here what we've called the open architecture clout, and the big brands, no surprises, dominating there: BlackRock, Franklin Templeton, JP Morgan and PIMCO across Europe. So the platform winners, we think it's important to understand the sentiment out there and which platforms both asset managers and the industry think are doing well. We put this to our broader poll. Who do you think in 3 years' time, was the time frame, will be the biggest global platforms? Allfunds, co-funds, Credit Suisse, Funds Network and UBS dominating there. And we definitely see a move across Europe for this to become a scale game. The big are getting bigger and the big brands, let me say that adjective again, are dominating. We then honed in more specifically and we chose 50 senior directors at fund management groups with pan-European roles and responsibilities. And we really wanted to ask them from their point of view who the best platforms are to deal with. Here's just one of the questions we put to them: which European platforms offer the best value for money? And you can see there the top 5 responses, with Allfunds followed by co-funds, then Fund Channel being nominated. In the report, we also report back on opinion on the best platforms in Europe for MI and distribution potential. So let me try and summarise some of the key findings from our report. The first thing that springs out to me across European is everyone is undergoing a period of margin squeeze. This applies both to asset managers and to platforms. The impact of transparency and RDR, well, in the UK, it would appear there's certainly pressure on that resting point, that 75 basis points for active equity management. That is coming down to a level which I think will end up with 65 basis points as the new norm. When you look at platforms in IFA markets such as the UK and Germany, certainly margin pressure there with the platforms themselves seeing charges come down from levels that may historically have been nearer 50 basis points in the UK towards a new norm of circa 30 basis points here. So margin pressure here. I think in Italy, this is maybe why it's been such a popular market for fund managers. That's where I see little margin pressure. I don't see a consumer champion. I don't see a catalyst for change. To quote the managing director of one asset management business out there, it's a good market to be in if you're a distributor. It's a good market to be in if you're a fund manager. I'm not sure it's such a good market to be in if you're a consumer. Greater concentration, we definitely see this across asset managers and platforms. This is the era of the blockbuster fund. This is the era of the blockbuster international platform. The big are getting bigger. Some of the brand names I've shared with you in the asset management space are just becoming prevalent across Europe. We've talked about BlackRock. We've talked about Franklin Templeton, some groups as well, such as M&G, on the rise over the last few years. M&G's success noted by many in the French market over recent years. I question if we're waving goodbye to open architecture, or in fact, did it ever really exist? In markets such as Germany and the UK, I think IFAs are increasingly outsourcing the investment management piece to a core bunch of fund selectors. That is naturally bringing some levels of concentration to these markets. At the same time, banks in markets such as Spain and Italy have opened up more towards third-party funds, and I think the natural resting point across Europe is a guided architecture model. It's certainly true that the Netherlands and the UK have sneezed and Europe is catching the RDR cold. As I mentioned earlier, I think markets may well move ahead of regulatory requirements. We can see the introduction of clean share classes across Europe and distributors starting to move to cleaner charging models there. Vertical integration, well, I think this is probably an indirect result of the margin pressure faced by platforms. Platforms are starting to integrate with asset managers and to buy distribution. We talked to someone in the Swiss market who made the very valid point. If you're a platform without distribution trying to make it in the Swiss market, it's going to be a very difficult journey for you. International platforms, I mentioned earlier, have grown by 39% year on year to Q3 2013. So both cross-border funds and international platforms posting tremendous growth there. Their sites are not just limited to Europe, and I think this is another interesting thing people have to take into account. If you're looking at growth, Latin America, the markets we hear mentioned there are Brazil, Mexico, Chile, Colombia, and also in Asia, people looking typically as a starting point to Hong Kong and Singapore. But those markets are opening up, and we're seeing European platforms move over there. By way of an example, international platform UBS onboarded a private banking client in Singapore last year. So for a fund manager, it's become increasingly difficult to have single domestic relationships and discussions with distributors and with platforms. This is the era of the global relationship. I hope that's been useful. For those of you who are interested in the report, it will bring you analysis from more than 60 leading European platforms. We collected data this year from 41 platforms, which has given us some great insights into these markets. And we'll tell you who the major fund managers are in each market. We'll tell you how distribution works, who is on the ground selling things, and who are the key movers and shakers in each market. Who is it that you're going to go and need to talk to if you want to distribute your products in any of our 9 key markets? As for the platforms, well, in terms of competitor analysis, I think it will give you a very good overview and insight into who is doing what they're charging, and what is working. Thank you for listening. I hope that's been useful. You can find more information about this report or indeed any of our reports online at www.theplatforum.com. Thank you. Bye-bye.